What's up, apes? Hi, lady apes, gentlemen apes. This is Ape Andy, sharing individual opinion for you to make up your own individual minds. Now, big option day. Big option day is July the 16th. There is a ton, 2 times, biblical, not 2 tons, biblical tons of short positions buried inside those options, put options. When those put options expire, then those FTD gets unburied. Biblical amounts of FTD gets unburied after July the 16th. If those put options expire, OTM, out of the money. So if the GME price stays above 200, then many tons and tons of put options will expire OTM, unburying many FTDs hidden inside put options. Biblical amount of FTD will appear after July the 16th, option expiration date. Because a year ago, or even in January, when the shorts were still shorting GME, the January 2021 mini FOMO hasn't happened yet, right? So they were shorting GME and shorting GME. And then came the Reddit apes, okay, which pushed the price of GME up towards 400 something. Okay, and then the SHF, the shorting hedge funds, will have to pretend they cover, so they could go to Congress hearing and tell Madam Senator, short positions were covered. Okay, covered in the technical sense is covered in put options. Okay. So you could go check the option chain yourself and go do some research on DDs in Reddit posts, and you will find that tons and tons of FTDs fail to deliver or hidden inside put options. July 16th. It's a huge options day. The next huge option day is January in 2022. Okay. So, yeah, Ape Andy, why are you telling me this? They could just kick the can down the road, right? They could in the past. That's why there were FTD cycles and cycles and cycles and cycles. Oh, I'm getting dizzy. Okay. So, but now we know for a fact that DTCC Rule 005 is in place and effective since June the 30th. So that means the FTD loophole has been fixed. Right? So what does that rule says? That rule says, yes, you could borrow and short, but you must have a locate. Oh yeah, yes sir, I'm SHF. I'm shorting hedge funds. I have a locate. It's inside the put options. Ah, okay. But then what if that put option expires out of the money? Then those FTD gets unburied, right? That's what I meant. If that happens after July the 16th, all these tons and tons of biblical amounts of FTD gets unburied, then they would have to be taken care of. The MMs must buy at market price. Then that would cause huge price volatility. I didn't say up or down. You know which direction. When those FTD gets taken care of. So you would have to count T+4 or T+6 days after July the 16th. Okay? Not doing dates. These are not MOASS dates. MOASS is unrelated to these, but these are small catalysts. These are small catalysts that will lead to gamma squeeze. Gamma squeeze after gamma squeeze after gamma squeeze leads to eventually mother of all short squeeze, abbreviated to be MOASS, MOASS, okay? Now, when price volatility happens, price either go up or down, okay? Assuming, let's say, price goes up. If price goes up beyond 350, then the first domino of the SHF may fall. What makes you say that? Based on what, Bandy? Okay, the wind is getting my hair in a mess, but okay. Now, the SHF, when these FTD gets unburied, they have to take care of it, right? The MM has to buy at market price. Price goes up. Price goes beyond 350. Why 350? See, in March, it gets near 350, flash crash. Before the June 9th shareholders meeting, it got to 344, put the price down, okay? Without causing halts. Very smart way of the SHF. So, judging from that, SHF don't want the price to go beyond 350. Why not? Meaning, this is just a theory, if it gets beyond 350 into the 400s and 500s, then the first domino will fall. Once the small SHF falls, they get margin called, right? And NSCC rule 002 plus 801 is already effective. So that's margin check daily, not margin check monthly. These are effective and in place already. And if price goes beyond 350 into 400s and 500s, okay, after the July 16th option expiry, where FTDs are unburied and have to be taken care of, MM must buy at market price, then of course, most likely, price shoots beyond 350 to 400, 500 range. The first domino falls. The first domino, I don't know, maybe it's SHF small m, okay? If they fall, then most likely it's small m. If they fall, then T plus 5, they get liquidated. Well, that's the rule of the game. Margin check daily. Okay. Small m, the first domino falls. They couldn't provide enough collateral because price went beyond 350 into 400, into 500 range. They get margin called at the end of the day at margin check, daily margin check, and they have to provide cash collateral within 1 hour. Sorry, price too high, cannot provide. Then okay, then they default. They would have to be liquidated. T plus 5. So you would see price fluctuation, but we don't know. We don't know by judging at the market price, the charts. We don't know when small m, the first domino, falls. But if it goes beyond 350 into 400, 500 range, we are assuming that the first domino will fall. Then you count T plus 5 days. When that first domino gets liquidated, the clearinghouse computer goes in and liquidate, buy at whatever price. This is computer, I don't care which price, just buy. Okay, that shoots the price up even more because it's computer buying. Computer don't care which price. That shoots up the price even more. The first domino falls, count T plus 5 business days, okay, and then clearinghouse computer steps in and liquidates it, buying at whatever, at the market price, don't care which price, computer don't care. That shoots up the price even more. When that happens, the second domino, the larger sized SHF, might not be able to take that price. At the end of that day, the second domino gets margin called. If the second domino, the SHF, could provide enough cash within 1 hour, they're okay. If not, they get liquidated. Not on that day. Another T plus 5 business days. So you would see this price hike, first domino falls, T plus 5 business days, nothing, you think it's over. And then another price hike because liquidation of the first domino came in. This liquidation causes the second domino to get margin called. Boing, margin called. Okay. And then the price might go down for T plus 5 business days. And then the liquidation of the second domino comes in. Computer buys at whatever price shoots up again, even higher. Okay, so high. The camera's not getting Ape Andy's face. Okay. So that's how it will go. That's why there are peaks and valleys, peaks and valleys, peaks and valleys, peaks and valleys. Okay. Gamma squeeze leading to another gamma squeeze. Small gamma, small gamma, small gamma, medium gamma, medium gamma, large gamma, large gamma. And then eventually, when the largest SHF, who also has power, if they fall, then if it gets to that point, the largest SHF, who has also power, when they fall, that means they cannot provide enough collateral when margin called, because the price is very high, right? Then they get liquidated, T plus 5 business days. Let's go back to the first domino. When the first domino falls, their liquidation, it's not just to liquidate their first domino, SHF, GME positions. Their entire company's portfolio gets liquidated. You get what I mean? That's why if you see GME squeeze, the first domino falls, but the first domino SHF, they also shorted AMC, right? So AMC also squeeze because the clearinghouse liquidation computer steps in. They liquidate all the positions of that first domino, small m. Not just the GME short positions, also the AMC short positions. That is why if one meme stock squeezes, the little SHF, first domino, second domino, third domino, small dominoes fall, the liquidation is not just their AMC position, it's also their GME positions. If GME squeezes first domino falls, the liquidation is not the first dominoes, just GME positions, also AMC positions, and other meme stocks. Okay? Okay, so back to that point. Strategy is buy and hold, okay? Hold on to your beloved meme stock, AMC, hold on to your beloved meme stock, GME. That's why I keep telling apes, no need to be divisive. No need to say, oh, your meme stock is better. My meme stock is better. No need for that. Why? Because the SHF short all these meme stocks, okay? Because they didn't do well during the COVID pandemic. So if one squeezes, the other will squeeze. Because the same SHF have been shorting all these. And when that SHF, be it which number domino falls, liquidation liquidates that domino's, that SHF's entire portfolio. That's how it works. Okay, that's how it works. So just hold on to your beloved meme stock and hold on tight. Okay, just hold on tight. That is also why. See, some apes are saying, okay, this is just an example. I hold on to my AMC. When AMC squeezes, I will sell and then I will put my money into GME. Sorry, too late. They squeeze almost at the same time, right? The liquidation of the domino SHF that contains both AMC and GME, it's liquidated at the same time. So you couldn't even tell which one squeezed first, judging from the charts. Ah, okay. So if you are 100% GME or 100% AMC, you're thinking, when AMC squeezes, then I use my proceeds from the profits of AMC and then I go into GME. Not too late. Okay. Or you say in the other way around, when GME squeezes, I'm going to use my GME profits and go to AMC. Too late. They squeeze at the same time. They squeeze at the same time. Okay. They squeeze almost at the same time. Because liquidation computer steps in and liquidates the entire portfolio of that SHF, which, that SHF shorted both GME and AMC. So the squeeze is going to happen at the same time. You can't even tell which one squeezed first, okay? You could tell T plus 5 business days earlier which price went up first beyond the threshold, beyond the withstanding threshold of that first domino SHF. You could. So you could tell which one squeezed first. Okay. Well, that's just my opinion. So, hey Pandy, another follow-up question. Why did the SHF who short GME also shorted AMC? Because when the pandemic first started, or even before the pandemic came, all these brick and mortar stores on the AI algorithm of the hedge funds, they have a list. This is a brick and mortar company. It has so many chain stores like GME, and they're not making enough money. Way back when, GME, okay? When GME wasn't doing well. The brick and mortar store paying rent, not enough revenue. GME had thousands of stores, right? Okay. AMC, hundreds of movie theaters. And pandemic came, you still have to pay property tax on those movie theaters, staff, all that, fixed costs, but then COVID lockdown, right? So the AI algorithm are telling the SHF, these companies aren't doing well. Number one, not doing well is GME. Number two, not doing well is AMC. Short candidates, GME, AMC. So the hedge fund listened to the AI algorithm. Yes, AI, smarter than humans, are telling us that GME will go down, AMC will go down. Let's short. It's a sure bet. It's a 100%, 200% sure win bet. Okay? Brick and mortar store, no revenue, still paying property tax, still paying rent. COVID coming, COVID lockdown. How could GME win? How could AMC win? Short it. Bring the price down. Naked short it. Bar more, short it. So they short it, and some institution bought it. Some retail investors bought it, and the trading platform lent it out, and the institution lent it out again. And the hedge funds bought and short. Okay, if you have 10 shares of GME, short it. Okay, 5 shares were bought by institutions, 5 shares were bought by retail through trading apps. Then these institutions lent out those 5 shares again, and the trading apps lent out those 5 shares again, and they were borrowed by the SHF and shorted again. So 20 stocks were shorted, okay? And these were again bought back by institutions and retail, okay? And they got borrowed again and shorted. So now 30 shares were shorted, okay? So the short interest, that's why the short interest is more than the float, okay? By a lot, okay? That's all I can tell you. Now, okay, MOASS is not if, it is when. MOASS is inching closer and closer. MOASS is very near, so near that you could almost feel it and smell it, right? With all the rules in place. So that means the SHF, their maneuvers are less and less. Okay, but after the MOASS, there are more plays, okay? So I'm gonna leave a Discord link in the comments below. This is not fake account. I'm gonna leave it in the comments below. Discord by Major Tom and Ape Andy, and after the MOASS there would be more plays. There would be other plays. This is just one play in your life. There'll be more plays. There'll be more plays. There are more opportunities after MOASS of GME. Okay, I'll leave the Discord link in the comments below. Not fake account. This Discord is handled by Major Tom and Ape Andy together. Be strong, apes. Ape Andy and Major Tom. We love both GME and AMC. Be strong, apes.